Hello, everyone. For those of you who don't know who I am, my name is Sam Wong. I graduated with a finance degree. I always have an interest about stock markets, and for those of you who have followed me in the past, know that I'll give some tips on few stocks that were quite an incredible return, like PDD, Pinduoduo, like JD last year sometime, XPEV, which was really great rally in November last year, which a really great return. And then a few other ones like retail stock that have been talked about. And I also gave a video that talked about 2011 this year, what was some of the good stock to buy. But my friend told me it's probably easier and more well received if I broken out into different pieces. So now I'm just giving you another stock, which actually before this one I was recommended Citigroup, and Citigroup if you buy at the time I told you to, you will get 10% return obviously when their earnings come up. They did deliver the earning per share, but somehow it wasn't well received. So the stock have withdrawn back about 6%. But I do think in the long run, the stock will go to $80. And let's talk about MGM. Is MGM a buy? Well, for those of you who don't know what MGM is, I'm going to show you the next slide to talk about it. So MGM is an international company that have own and operate casino, hotel, and entertainment resort in the United States and Macau. The company operates through three regions: Las Vegas Strip Resorts, Regional Operation MGM China. Its casino resort offer gambling, hotel, convention, dining, entertainment, retail, and other resort amenities. The company casino operated actually in March 2020. It has 29 hotel and destination gaming offerings. So what is so good about that one? If you have followed it, if you bought it in March and April timeline of this year, where it was at the really low, you will already have over 300% return. The stock actually did value around back in around November timeline and really pushed back very close to 52 weeks high, which is about 30 some dollars. And of course, Friday it wasn't a good day for U.S. when the bank announced earnings and the retail weak December retail sales. So the stock actually retreated a little bit, which gave us some opportunity to buy opportunity. The target price I have is $38 for this stock for this year. So what was some of the good thing about why I think this stock is a good buy? The PE ratio is 11 price to earnings, which actually compared the industry about 30, it was much more better. And also the price per book is only 2 times, but then which is much lower than the same casino or entertainment or restaurant in the same industry. Net profit margin is double digit, which is really good because some of the video, if you look at what I said before, they don't have double digit, but it's just single. So which potential meaning this is really good business to be in. They also have a pretty good growth rate, which I actually get into more detail. What are some of the potential that they have that will continue to continue to expand and grow. The company is also very efficient compared to a peer. The return on equity of 22% in the past. They do have some debt, which very typical in casino hotel industry, but they have enough cash that definitely will be able to cover these current liabilities. And then they were bullish. Of course, all the stock on Friday and Thursday actually tipped back quite a bit, but then they were bullish in the week before. So from a technical perspective, because they were still driving up from $20, push it to 30 plus. So these are the major reasons why I recommend buying. The current price on Friday, as of ending Friday, close to $29.80. Like I said, if you will target to be $38 this year, I think it will be, if it tip back a little bit, maybe $28, it will be a great buy. But again, a lot of people who watch my video know that I kind of more conservative to be more discounted a little bit on the stock. So you may not able to get it because of what I have discounted. So if you believe in the target price and the reason I would support it, then definitely you will want to buy it even though below $30, right? Because $8 return is pretty good deal. Some other favorable factors why is a good buy is online industry. For those of you who have heard about DraftKings stock, this is a stock that really doing try to promote the online betting, and they do have an NBA player supporting the company sponsoring it. So if online betting become legalized in America in different places, so some states still not legal at this point, then obviously you will really favorable to MGM and some other casino companies, not let's say MGM. You would definitely help them expand it. And the reason how it would is for those people who are actually went to Macau before, and Macau have casino just like Las Vegas, MGM, they have an MGM resort there as well. You can see what people do, and you understood what I exactly meant. Why this online betting will help them, because people who are staying in a hotel, they also will do online betting. I mean, they have those store like ticket places for you to buy. And actually today you can do online and kind of buy it yourself instead of doing through the window. So because the way in China, they're not so sophisticated online, so they do window. I mean, what I meant is they have screen, you buy and tell them, but they are doing it online for you. So they have a lot, and the thing about it was very robust. I mean, they have NBA, they have football. I mean, even Asia Pacific not so big about football. I mean, they do bet on that as well. Mostly NBA, and then there's soccer, which is in UK and Europe are very big about it. They have any kind of basically horse racing and so on too. So it was very robust. If you get expanded, you have so many different options and chances on the online betting, right? And then there's a lot of applications these days that playing those casino slot machine or whatever games you have. Today it may not be legal to play those with money, but eventually you will be able to if you legalize, right? So that's a really big market out there for that, for the growth and expand it. And then the Chinese gambling market recovery. So the pandemic actually started in China last year, but it was kind of recovering. I mean, they have more cases growing now, but still very, very well contained. So the control piece of it is really good and doing very well. So the more people actually now were allowed to travel to Macau. So this definitely this year. So you can see the recovery of the gambling in Macau, China, and it will be recovered at MGM. It will be benefit for them to earn more money. I mean, their forecast is actually saying they will lose money this year, but I personally believe they will actually turn things around and become positive, which will be surprise the market, and that will help them to grow the company. The stock actually in 2007, because of the crisis of 2008, was $99. That's the highest they had, to their lows at $5. Just give you some legendary history of MGM. So they survived in this kind of crisis, financial crisis, tell you the opportunity or room to continue to rebound and grow. And I really look forward to. I think it will be a $50 eventually company. And that's also the most exciting thing, recent announcement that they have an intention of mergers with IAC in UK. So this is more from a long-term strategic. This actually gives them opportunity and really much more well positioned as a global leader that operated under on the one brand name. That will help them to accelerate growth, and MGM potential be the largest online sport betting and gaming market once it's merged. They also can help expand the company market opportunity by leveraging their expertise in this new market. So this is really the shareholder we react positively of this probably because of the bad timing in a sense, but in the long run for a gambling company is grow, and also the net profit margin, they double digit, bear that in mind. You really help them to grow the company to make more earnings, so the return, like also the investment equity, remember 22.3%. So they actually look at investment very carefully before they put money in. So these are the strength of the company that I think not other company may not, other gambling company may not have. So I really recommend this stock. I hope you like the video. Give me a like, and hopefully you will follow me on the next video that I will continue introducing what are the quick stock to buy. And for the stock I recommended so far, so far so good on the one, because I did go for a very serious of analysis before I publish it, and with some fundamental numbers supporting the growth recent news and technical analysis. So that's is how I combine the information and help you with that. But you do have to remember that once you buy it, you do have to look at the exit point sometime, so then you will be able to capitalize the gains, not just on paper. Have a nice and wonderful day.